Well, folks, what happens over the next 72 hours in the stock market is going to be what dictates where the stock market goes over the next month. And it's going to be what completely dictates the vibe around the stock market. And the vibe around the stock market is known as sentiment. That is the fancy word for the stock market, okay? And this is so huge. I want to explain to everybody what's about to transpire, what's about to happen here, so everybody is aware that this is about to happen, because this is obviously, it's going to move your money. And it's going to either move your money up big or down big, essentially. Okay. Now, speaking about big money, look at this. I was just sent this. ARK just posted the biggest week of inflows in over a year with $534 million. That was the top 1% among ETFs. Now on fifth straight week of inflows. Crazier though, it's taken nearly $2 billion in since February 11th, which has lost about 39%. This guys is pretty darn shocking. I gotta say, it shows definitely there's a major belief in Cathie Wood. I'll just be honest. When you see these sorts of inflows, and like I said, some Cathie Wood stocks I like, some Cathie Wood stocks I don't like. But at the end of the day, none of us can deny the fact that a lot of people are sticking with Cathie Wood and sticking with her positions and believe, she's going to do right in the end and she's going to make a lot of money, right? That's the only reason you can get these sorts of inflows in a very, very vicious market. And, when you see these sorts of numbers, you got to think to yourself, this has to go beyond retail money. Is this really the guy with $5,000, on his Robinhood account putting in ARK? Or is this bigger money, right? That sees an opportunity here, that is looking and sees a lot of her stocks just obliterated, right? Almost every one of her stocks is down between 70 and 90 something percent. Every single one, from where they peaked out in 2021 versus where those stock prices are now, every single stock that's a major position in our portfolio, from what I've seen, is down between 70 and 90 plus percent. So it looks to me like there's some big money out there that's saying, those are down big, but they're going to come back. And maybe these aren't folks that necessarily believe in Cathie Wood over the next 5 years, but maybe they're looking and they're saying, we're due for a massive bounce for maybe a few weeks or maybe a few months, and therefore I'm willing to put some money in here, because that's serious dough. That's not like it's a small amount of money. When you're in the top 1% of ETFs in terms of inflows coming in, that means big money out there is saying, hey, we believe, at least in the short term, ARK's going to do very well, maybe over the long term as well. But that is, that's something to pay attention to, okay? You want to have your mind blown? Look at this. We have lost more value, actually significantly more value, than the dot-com bubble, okay? The dot-com bubble, if you tag on the dot-com bubble in the global financial crisis, we have lost more in value this year so far in the current decline than in those two combined. Think about that for a moment. The dot-com bubble and the global financial crisis. Now, two things I thought about when I first saw that, okay? One is, kind of makes sense because companies are far bigger now, right? Market capitalizations are far bigger than they've ever been at any point in the past. Look at the biggest companies in the world now. I mean, we're talking about companies that have, $2 trillion of market cap or so. That used to be numbers that weren't even fathomable, but these companies are more profitable than anything we ever imagined ever in human history. It's been amazing, right? And to be honest, that's the way it's always played out. These companies put up numbers that we never thought. There was a time period when no one ever thought a company could get to $100 billion market cap. That was crazy. Then it happened, and then a bunch of companies did it, right? Then we had our first company hit $1 trillion, right, which was Apple, and then multi-trillion, right? And so, eventually, there's going to be companies that have $5 trillion market caps, $10 trillion market caps. That will happen, and it'll actually happen sooner rather than later. But when it comes to this, it's just crazy to think about that. The other part I think about when I think about this is it just shows you how much devastation there's really been. And remember, at one point this week, the NASDAQ was down over 30% year to date. 30%. Like, that's just insane, right? You never get these sorts of declines. So between companies just being bigger and between just how vicious the decline has been, kind of makes sense, like how rough it has been and quite out there, right? And I put out this recently. It shows it's not a perfect chart, but I try to do a decent chart of my net worth from 2008 to 2022. And, that's my financial life right there, right in front of you. Okay. And I started out with about maybe roughly $1,000 or so in 2008. I had saved away, to nowadays, where I'm at essentially. And, I've had 5 major steps back. One was when I moved out of my parents' house. One was when I took over a year off. I left Quick Trip and didn't do anything for I don't know how long that was. A year and a half, maybe something like that, where I had no income. So I was using stock money to pay all my bills and support a family. I only had 1 kid at that time, but to do that, plus I got into earnings trades and swing trade and all this stuff. So I was losing money left and right in the market. And when I say losing money, I don't mean like going down on positions. I mean actually losing, because I was doing all this trading stuff. I went against everything that ever made me successful. That was a major drop. December 2018, I had a major step back there. Basically that whole fall time, the low was in December 23rd or December 24th of 2018, something like that for me. Obviously Rona, that was a quick one, but that was vicious. I got nailed in that one. And then recently, those are the 5 big, kind of step backs for me. I've had, 500 small steps back, thousands of steps forward. And kind of the biggest game changers for me personally was an accounting teacher, obviously the stock market, Warren Buffett, being able to find him and understand his philosophies. Quick Trip was a game changer because that was my first good job. Starting my real estate marketing company and making that a success was huge for my confidence in business and just kind of moving forward. YouTube definitely changed my life in a massive way. And then I bought 3 homes over time, which those all, I made a lot of money. I didn't get into real estate till 2019, and every single one of the homes I ever bought, I made a lot of money in those homes. And so I got to say that was definitely a game changer for me. And those were the 7 core things that were at least the biggest game changers for me personally, financially. And so I show you this because I know a lot of you guys have taken a big step back over the past 7 or 8 months. There's no doubt. And you got to understand that is part of the process. It doesn't matter who you are. It doesn't matter what stage you're at. I've taken many major steps back and a ton of small steps back in my financial life. And what you're going through right now, that won't be the last time this is going to happen. You're going to have another one. Maybe it's in a few years from now. Maybe it's in 5 years from now or 10 years from now. But you'll have another major step back. And you'll have another major step back down the road. That's the way it goes. All that matters at the end of the pie is that the thing's getting bigger, right? And the chart's going up. That's all that matters in the long term. But don't worry. You're going to have some time periods when you're, make some bad decisions, or you just get in a really bad market. Some unfortunate stuff happens. You never know. Life's crazy. And next thing you know, you have a major step back. It's part of the game of money. You don't get too distraught over it. You understand this is just part of the whole story. Okay. I think it's very important for everybody to understand. I thought, after something serious like that, I thought I would show you this portfolio is down 87%. Well, at least I got a 40 cent a share dividend. Oh man. Okay. This one, I love this one because this one, funny, but so dang truthful. Some of you guys looking at this right now, you know this. Okay. I love weekends. I hate them. I can't make money from stocks in a bull market. And that's the way I feel too. Throughout my entire journey in the stock market since I got in late 08, if I'm doing well in the market and it's a weekend, it's like, because you get so used to making money and seeing your accounts green, right? During a bear market, I love weekends. Same. Yeah. pretty darn same. Okay. So I want to go through now with you guys and tell you exactly what's transpiring over the next basically 72 hours and why this is going to drive the stock market and why it's so big. But first off, I want to say thank you to FTXUS for sponsoring today's video as always. So FTX, their fees are up to 85% lower than competitors. It is the crypto exchange I personally use in real life. And if I'm ever making any moves in the crypto market, it's what I personally use. And it's pretty awesome because every trade over $10, you get a free coin. Now, right now, they got a special going on, which is essentially you can get up to $100 in crypto free. Okay. That's pretty darn awesome. Okay. Up to $100 free with crypto when you make certain deposits on the platform. Check that out. That'll be pinned comment down there. It's absolutely amazing. You might know FTXUS because they partner with folks like Tom Brady, Steph Curry, and folks like that. So it is absolutely amazing. And from what I heard, FTX has stocks coming soon. And I'm going to tell you, from the rumors I've heard, it's going to be pretty darn epic. Okay, I don't want to say anything right now because I know they're not ready to launch that, but from what I'm hearing, it's pretty darn epic. Okay, so yeah, make sure you sign up for that. Take advantage of that. Use the referral code Holy Smokers, and like I said, get the $100 in free crypto before that ends because you never know when they will take something like that away. But it's out there right now for you. Okay, all right. So basically, we all know about the inflation rate came out last week. We had a decline there, so that's good. Now, when it comes to inflation, this is being put to bed. This is being put to bed for a bit, okay? Basically, now we got to wait another month before we get the new inflation numbers. So now we're going to be in a dark period when it comes to the inflation rate for about the next month, roughly, a little less than a month, for about the next month. Whenever that next number comes out, that's the next game changer for the market outside of what's going on over the next 72 hours. But that will be the next game changer for the market. That's going to be massive. We need to see another number go down. But now that's kind of being put to sleep, okay, for a bit here. So we don't have that going on for the market, right? So we can't have any movements there. Powell's been out there, the previous week, obviously they made the moves. And this past week he was out there, talking about we can't guarantee a soft landing. Jerome Powell's about to go sleepy. Okay. He's going to kind of get out of the limelight, in my opinion, for at least the next month or so. And he's going to take a little rest. Okay. That's my opinion. And so you won't see a ton of crazy headlines from Jerome Powell out there for a bit. Usually, they make their move they want to make. Maybe the next week they do some interviews, things like that. I don't think we're going to get anything game changing out of him for quite some time. Now they're going to kind of sit around and wait for the next inflation numbers, right? And then maybe they'll have commentary whenever that comes out. So we're not going to get any big news out of the Fed now for a bit. We're not going to get any big news out of inflation until, a month from now when we get the next numbers, right? So here we are in a moment where, okay, the two things that have been driving the market, inflation, the Fed, those are going to kind of go sleepy for a bit here, okay? Not just that, big tech's already reported. All we got left for big tech earnings is Intuit and NVIDIA, okay? And Intuit doesn't really move the market. NVIDIA maybe a little bit because that could affect AMD, that could affect other semiconductor players, maybe the vibes of the market in general. So that one matters a little bit here. But to be honest, all the big dogs have already reported. And this is my big tech watch list, by the way. By the way, I know some people are saying I should take Shopify off the big tech watch list because the market cap's fallen so much. Last week, it was trading for like $40 billion. And it's like, how are you going to have a $40 billion company under big tech? Shopify will eventually be back to $100 billion plus. And so that's why I keep it on the list. It's like, yeah, it's in a kind of a devastated state right now, but eventually it's going to be back and will be considered big tech. Some of these other companies are even under 100 billion now. You look at PayPal, you look at Netflix, those are both under 100 billion as well. So Intuit, if they miss some numbers or something, that one could be under 100 billion. But at the end of the day, those are really the big techs. Those are what, have heavy weights in the market and what are kind of the game changer for sentiment. So here we are in a moment where big tech earnings, we got to wait pretty much another 2 months before we get those again. And we don't have any inflation numbers. We don't have the Fed. So it's like, holy smokes, what do we got to drive this market, right? Well, so if you look at the United States of America, the group that drives this whole show, like who's out there, using Google search? Who's out there on Facebook and Instagram? Who's out there buying the new iPhones? Who's out there shopping at the stores, right? Who's out there eating at all those restaurants? Who's the ones that are driving the economy? It's the middle class, right? It's the folks that make anywhere from between about $50,000 a year and maybe a few $100,000 a year. That's who drives this whole show, right? It's not the super wealthy, the super rich, right? Those folks can only consume so much, right? If you've got, a $20 million net worth, there's only so much you can consume. If you've got a $100 million net worth, there's only so much you can consume. And for folks that, are in poverty, they're not driving this show either because they don't have a lot of money to spend out there, right? The middle class is who drives this whole thing, and that's what the majority of the United States of America is made up of, is this middle class, right? Now, if you think about the middle class, right, like where does the middle class all shop? Like where do these folks shop? Well, they shop at Costco, they shop at Walmart, they shop at Home Depot, they shop at Target. That's who's controlling everything, right? At the end of the day, that's who controls this entire economy. And if the middle class, the folks that are making anywhere from $50,000 to a few $100,000 a year, if those folks are doing bad, then we're going to see that start to show up in these companies' numbers because these are the companies that all those folks shop at, right? That's just a bottom line. That's where everybody like that shops, okay? And so here we are in a moment where essentially all these retailers are going to be reporting especially over a 48-hour period on Tuesday and Wednesday, okay? You're going to have Walmart report earnings. You're going to have Home Depot report earnings. You're going to have Target report earnings. And you're going to have Lowe's report earnings. Those four are extremely important, not just for the last quarter they just reported, but what does management team have to say about commentary and for guidance, okay? And I can tell you, if we're in a situation here where those companies miss and they have weak guidance and they say, hey, the consumer's not strong right now, that will be another leg lower for this market, unfortunately. That will be, we're going to go down 31, 32, 33% on the NASDAQ. We're going to go down 34, 35% on the Russell. That would be a very bad thing, because then everybody starts saying, uh-oh, consumers getting weak. Yeah, all this recession talk, it's looking more and more realistic. Because like I said, these folks, that's where they shop. The Home Depot, Target, Walmart. Costco's not reporting this week, but that's another place, okay? It's where everybody shops. So if the consumer's weak, that really starts the recession fears, which we already had, obviously, GDP go down this past quarter. So, people start thinking, oh boy, consumer's weak. Now, on the flip side, if we see strength from the consumer, right? And let's say Walmart, Target, Home Depot, these companies, Lowe's, they have good things to say, and they say, hey, consumer's strong from what we just reported and from what we're seeing for this next quarter. Because remember, all these companies are already a month and a half into their next quarter, okay? So they already know at least half of the numbers for their next quarter. If they say, no, we're pretty strong, numbers are strong, we're looking good. You want to talk about a breath of fresh air in terms of like people worrying about inflation's killing the middle class and like no one's going to have any money to spend. If those companies were to report that would be a massive bullish thing for the market. I mean, absolutely epically massive. And we would likely see a big rally on the back of that. So Tuesday and Wednesday, I'm telling you, are vital for the stock market. You also got TJX, which owns several different brands, reporting. You also got Kohl's reporting, which is another big box retailer, more for like clothing, obviously. Ross is another big one there. This is the week of retail. And by the way, this is the last big week of earnings. This is it, essentially. And then after that, it's just a few last companies reporting. You got Foot Locker on Friday, which is a stock I actually personally own. These companies are going to tell us the truth. They're going to tell us if the middle class is doomed and it's bad, or if we're in a situation where maybe it's not so bad. So this is going to be what drives the entire stock market, not just for this upcoming week, but basically until the next month when the inflation numbers come out around maybe June 11th or whenever those will come out, essentially, guys. So I'm telling you, it's a big week. Hope you guys enjoyed this. As always, make sure you get your free crypto from FTXUS. That will be linked down there in the description. Also be the pinned comment down there. Much love and have a great day.